Now, it's a very sad day. It's a very sad day for the bears. It's officially a bull market on the SP 500. Now, we want to look at what this means to Bitcoin and crypto because, of course, this is why most of us degens are here. Let's take a look at what is happening in the stock markets, the massive pumps that we've seen overnight that continue to play out after hours, and then cut across to our beloved Bitcoin and cryptocurrencies as well. On top of that, there are some huge breakdowns on the Dixie, on the US dollar, seeing some significant resistance. So let's dive into all of this massive news headline that is breaking today. After you hit that like and subscribe, and let me know if you're sharing the content with a friend, just with that little button right there. Now, top of the video description is our link to our free crypto and economic report. We've been covering this for many, many months. Now the masses are catching on, and this is potentially where it starts to get very ugly. Once the masses catch on, then things get ugly. But for us, we have trading as well. You guys are making huge profits. At least the members are making massive profits there, 500%, 100%, 300%. I'll let you know how to get in on this later, but for now, let's crack on with the video. So I just posted this on Twitter, just looking at the huge pump up on the S&P after hours. So I'm basically just saying what's happened here. We've seen a massive jump from about 42.95 all the way up to 43.39. This takes out the key levels above the resistance levels on the futures chart. You can see this tiny little red dot here. It's taken out the August top. So this thing has continued to pump and pump and pump, even when the bears are talking about major breakdowns. And of course, I'm biased to the bullish side. So take that into account as you assess the information I'm giving you here today. But I'm biased for a very good reason. Higher highs, higher lows make for an uptrend. When you're in an uptrend, if you keep trying to short each of these moves, it destroys accounts. And that's why 90% of traders lose in the markets. And this is why so many smart analysts, smart individuals continue to get it wrong. And that money just basically transfers to those who are trading with the trend, or basically have a sound plan for making money from the markets. So back to the analysis here, and we've got this huge breakthrough at the top. So I'm trying to figure out what was going on there. We're seeing big headlines from the Wall Street Journal talk about the S&P 500 entering a new bull market as big tech lifts the index. GameStop has absolutely got destroyed, but that doesn't really matter to the rest of us here. Basically, these markets are going up, and they're going up in a big way. Futures market breaking through that top. The S&P 500 now officially in a bull market because we're seeing it close at 20% above the lowest close. So basically, they measure it from the lowest close after the low, or before the low in this case, basically the lowest low there, and that was on the 12th of October. We had the 13th of October low, which is what we've been talking about as being the cycle low for all of the stock or US stock markets there, lowing in October. And now from that low to the current closing price brings us out at 20.04%. So technically speaking, it's in a bull market because on the way down, when you get a 20% drop close to close, that's technically a bear market. And so, of course, these calls come out much, much later than the lows themselves. And we've had so many signals along the way to let us know about these lows. And I can appreciate that there are still many bears out there as well. It's going to be the case. There's going to be still more bears until price breaks through around 46, and then again at the tops once it decisively breaks through 4,800. And even then, you will still have a lot of bears calling for the collapse of the market because they are trading the economy rather than the charts themselves. That's a huge problem out there with basically majority of analysts and people online and everything you see on TV. They continue to trade the economy rather than the chart, rather than the data that is in front of them. All right, so this is the big news we've had. The Wall Street Journal here talking about the bull market has begun. So how did this happen? How did we get to this point right now? Well, Tesla is up 4.5% on the day. I've zoomed in nice and close here. We're on the daily here. Tesla had a huge day up from $223 to a high of $235, closing at $234.86. But as you can see here, the post session, so basically once the market closes and there's some trading going on after hours, you can see the huge move compared to the close. This is where it's currently trading. You can see it moving around as I'm filming the video. So in terms of a percentage from the closing price of the day just happened, a few hours ago, if we could take it all the way up to approximately there, 246.40, that's another 5% on the move. So why is this affecting the market so much? Why is the move on Tesla affecting the markets? Well, it's one of the biggest market caps in all of the US stock market. It just surpassed Berkshire Hathaway. Of course, that's Warren Buffett's company. And now Tesla is sitting at number 6, just behind Nvidia and Amazon, Alphabet, Microsoft, and Apple. So basically in that top 6 now. And, the majority of these companies are all tech. Apple, Microsoft, that's tech, Meta, tech. You got finance with Visa, and it's also in the NASDAQ. A lot of tech is pumping the market up. And that has been worrying for many people because they think the breadth is an important issue here. The breadth meaning there is a few companies pumping these markets up, and the majority, thousands and thousands of stocks, still aren't moving up. Now, this is something that we have also covered because we are seeing a lot of these thousands of stocks also breaking out of key resistance levels. So this is all important to help us identify the time of the cycle we're in, because of course, most of us are here wanting to know about Bitcoin and cryptos and the cycle in that regard. But if we can understand where the overall market is at, we know that there is a risk appetite out there for investors, and eventually they'll start to flood their money into BTC and crypto, just like has happened in every other cycle. That is the main thing we need to know about. We don't need to know about the economy as much as we need to know about what is happening in the chart. And I know that ticks a few people off and they want to hear more about the economy. We'll talk about it, but the main thing we need to focus on to make money, which is what we're here for, is of course the charts. So the Russell 2000 is basically your shitcoin index of the stock market, smallest caps out there, and it has recently just broken out. So the last few days has seen it move up. It doesn't have a huge impact on things like the S&P or the NASDAQ, which you just had open, because they are the shit coins. They are the shit stocks. They're the smallest caps. They're not going to move the market. And we want to see the good companies move the market, because then we know that there is more appetite out there for good stocks. The shittier stocks, the crappier stuff, that's the stuff you gamble on later on. You're hoping to make a 50x, 100x. Sometimes they work, sometimes they don't. They go to zero. People move on and look for the next thing that's going to do a 20x, 50x, 100x. That's the point of this index. We don't need to see all of the market pumping up. Typically when that happens, we're getting towards the end of a cycle, like what happens with crypto and Bitcoin. When everything is pumping, we know that. We should know that by now. When it's all pumping, we're loving it. We're getting some profits, but most of us start to get the smart ones start to get a little bit worried, because that's the end of a cycle. That's the end of a signal. We're not there yet. We still got a long way to go when it comes to the Russell 2000 reaching a peak and then potentially surpassing that peak as we continue on with this multi-year bull market, and then we'll hit a multi-year bear market. But we're not there yet. There's going to be some major problems after that. So the ugly thing I wanted to mention here is the headlines that we're going through. Now that the call is out there for the bull market, the masses are getting this into their news feeds, and they're starting to see, the bull market's on, things might be safe again to invest in. And so we pay particular attention to what's going on in the macro there. So if we can get a close above these levels on the next break, the next trading day being, the next 24 hours for Friday, that could lead us to a good position to start in for the next week. But we're going to have to feel some sort of resistance and a pullback, a slight pullback, a correction in a bull market. This is a correction in a bull market. This is a correction in a bull market. This move is a correction in a bull market. This is a correction in a bull market. That is going to come, and we're getting closer to these higher resistance levels up here at about that 4,600 points, especially if the futures market is now trading at 43.39. We're approximately 4.7% away from those levels, coming in at 45 to 4,600 points. Maybe we get a little bit of a rejection earlier on, but nonetheless, all I'm trying to prepare us for here is that we should see some sort of small pullback, maybe slightly larger, but like I said, these are all pullbacks within a bull market. So beware of that, because this is now starting to catch on to the mainstream media, and the masses are now starting to hear it after we've been talking about the bull market beginning back here, looking at the double bottom here, looking at two significant lows, I should say, 3,600 points and 3,500 points, the higher bottom, and then this huge, significant area that we've banged on about so many times, that banking crisis low that happened in March. That was a key area for the market to bounce from. And this was a key support level because it was a higher low on extremely bad news. This is how bottoms are formed. We're seeing it in real time play out in front of our very eyes. We're also seeing more stocks hit new all-time highs in front of our very eyes. So let's keep a lookout for those as we continue on in this, I guess, first stage, this transitional period of a bear to a bull market. This is the way they form at the bottoms. We've been talking about it for months now on the channel. So the same sort of thing we've been talking about is the US dollar and how this happens in the chart. So looking at the technicals on the chart and how it plays out in the media. So we've seen ultra bearish news at the lows. The market has pushed away. Didn't push away that hard. We're still seeing some lower highs form here, coming up to resistance. And we just saw a breakdown on the US dollar underneath this 50% level from that high to the current low in this cycle, the one on the 14th of April, which coincidentally was also the top for BTC at that $31,000 level. So this potentially is going to help out Bitcoin and maybe make some gains if this thing continues to drop. We've got lower highs forming on the daily, lower lows also beginning to form. The next key breakdown would be around 103 or 102.96. That's the key there for this market to break down, to bring in some more strength for BTC. We see a drop in the US dollar, potentially a little more strength coming through for BTC. As for Bitcoin and cryptocurrency space, this is what we've seen overall, and it coincides with the news narrative that we've been talking about forever, but in particular today as we start to see some bullish headlines come through for the SP 500. We've looked at it multiple times for the US dollar and other commodities, especially when natural gas was such a big thing in 2022. The world had to go into recession because no one could afford their gas and people were going to stop paying their bills, etc., etc. That was the narrative that was being pushed. Now remember, the economy may not be doing so well. There might be some very, very significant problems for people, and we know there actually are. Not being able to afford potential food or energies or cars or fuel or their rent. That's the economy. Those things are getting more difficult. However, we trade the charts. We make money from the charts themselves. And so what was happening at those peaks in the market was the news headlines, all that stuff we hear about the economy. US dollar, super bullish. Everyone get on it. Wrong. It went down. Lower highs, lower lows. Really big fluctuating price ranges. That is distribution. Market went down. Now, huge news. Ultra bearish for the US dollar. Guys, it's going to collapse even further. This is it. It's over. Wrong again. It goes up from that point. That's why I'm warning about this at the moment. Maybe we see a little bit of a pullback for the US dollar. But overall, in the long term, I think these things are just getting started, just like this. You got a bearish call. The market does the opposite, but it's not a very strong push to the upside. Maybe it goes on, but at the moment, it's not looking like a very strong push to the upside. So eventually that may continue as well. So going across to crypto and how this all works in the media, well, November, we had FTX collapse. All crypto exchanges become a target. Binance had to collapse. That was a huge thing back in November and December of 2022. Crypto.com had to collapse. KuCoin had to collapse. Bybit had to collapse. They just target the next thing. Pick a narrative, spread it across everything else. I'm mentioning this now because of the biggest news we have at the moment is Binance and Coinbase getting sued. Then they say all exchanges are going to get sued. I've seen content on Twitter. Crypto.com's going to get sued. The next one's going to get sued, so on and so forth. The way the media works, if you want to know, is some crisis happens, target everything else. Banking collapse, target all banks. All banks are going to collapse. And when you look at the data, it has been the least amount of banks collapse in history that has happened right now, the least number of them. And in terms of their size, their volume, it doesn't even compare to the top 5 banks, which basically make up 70, 80% of all deposits anyway. So it is a storm in a teacup. They are all nothing burgers. The thing we focus on is, of course, the chart. And for now, the macro is still in play to the upside. We still have higher highs, higher lows. We still have our significant low in place. We are still seeing the support levels holding for now. Maybe they don't, but for now, everything is still in play for a transition from a bear to a bull. But these things take a significant amount of time. We're probably only in this stage here. So if you see people comparing it to this stage and we got a blow off top coming, I think that's way too early. We're probably somewhere in this stage here, and we got to go through this particular stage in the next several months, sometime into 2024. That is the call for BTC for now on the macro. Now, dropping down to the weekly, we still have a few more days to go here. We're looking for some higher closes above 26,600. Ideally, we want to see it above 28,000, but for now, probably still got a bit more churning to do. Once we start to see that strength come back into BTC with some higher closes on the 4-hour, on the daily, that's going to flow over into the weekly, of course, and then all of these other positive signs, things that are going on in the US, the stock market, the Dixie potentially also losing some ground here, we'll probably start to see those effects come out for BTC. We're just waiting for these bearish narratives to be over, and they are these things here. Of course, we've seen that happen. That's over. Banking collapse, probably over. The suing going on between Binance, Coinbase, and the SEC, that'll eventually be over in the coming weeks as well. And this will probably be at higher prices in those coming weeks because the narrative would have just died off from that point. While the market's still deciding which way they want to go, we've got a macro view of the market overall, there's still a lot of profits to be made in cryptocurrencies. Now, we looked at this on the channel yesterday as Bitcoin is holding its ground while altcoins are still coming crashing down. And this was clearly evident on the total 3 market cap. We can see the market continuing to fall. The good news is, at least for traders, is they can still make profits in these markets. And I've talked about it before in terms of our free trading workshops. You can find a link to this at the top of the video description. Plenty of our members making great profits at the moment, trading the markets short, trading them long, and setting themselves up for the next bull market cycle when trading becomes a hell of a lot easier. When there is a clear trend in play, trading is far, far easier. These are the most difficult times to be trading, and if you're doing really well during these periods where the trend is just not that clear, then you're probably going to have a pretty good setup for that next stage in the cycle. When that comes, what I think is probably in the next 12 months or so. So if you want access to that, go and click the link at the top of the video description. That's our free trading workshops. Got plenty of steps on how to get that. It's just that link right there. So in the meantime, Bitcoin remains steady, is holding its ground. Maybe we still have some further downside, but overall, this has been quite a slow grind to the downside. With some support levels coming in, we've still got a few support levels further down at 24. So keep a lookout for that. Hit the like and subscribe. I'll see you on Twitter, Instagram, or on tomorrow's video. Thanks again, guys. See you at the next one. Take care and peace out.